Hello guys, welcome back. Yesterday we saw sales budget, right? Today I have brought you one problem from production budget and one problem from raw materials budget. Okay, these are all the subsequent budgets after we prepare the sales budget. So it would be a connected problem to the yesterday's problem. And this one problem is enough for production budget, and this one would be enough for raw materials budget. So let's get into the problem. So what does it mean by the production budget? Production budget is the budget we prepared in our organization to based on the sales we have budgeted for the upcoming period, and the desired stock level we have fixed, and by setting of the opening stock we have in our hand. So these are all the things we have to understand when it comes to production budget, and that's what the formula is also about. So production budget tells no number of units a company needs to produce during a period to meet the sales demand of that period and maintaining the inventory levels. Okay, that's what I also have given. Okay, let's get into the problem. uh, from the following information, prepare a production budget for a ABC company, assume that there is no loss. So for in this problem, we have to find out the production budget when there is no loss and when there is a loss. Okay, when there is a loss of 5 percentage and 10 percentage during the production while producing product X and product Y. Okay, and these two assumptions were given by the question. And sales budget and this division 1 and division wise sales data have been given for product X and product Y, and the stock levels, opening stock levels has been given, which is 1500 and 2000 for product Y, 1500 for product X, and 2000 for product Y. So okay, stock on 31st December estimated to be 10% more in quantity. Okay, this 10% more in quantity is 1500 into 110%, which is 1650 is our closing units, and 2000 into 110 units would be 2200 units is our closing stock. Okay, so we have read the question. Let's prepare this table. So what's the sales data as per sales data we don't need this division things and all this. The divisions data are only useful when it comes to sales budget. So when it comes to production budget, we need only total sales. Okay, then product X sales is, okay, let's do this. Product X, product Y. Okay, sales 7500 units and 9250 units is our sales. Okay, and then desired closing stock. What is our desired closing stock? They said that 10% more in quantity, so 1650 units and 2200 units. And what's our closing stock, opening stock? Okay, opening stock is 1500 units and then 2000 units. Okay, we got the sales value, budgeted sales value, we got the desired closing stock level, and we got the opening stock level. So what else? We have to find out the production budget in units. Since we are not given with any price for the, no, why we don't need any price for production budget, right? Okay, so production budget, how much we are going to produce is what we have listed here. So production budget 7500 units plus 1650 minus 1500, so 7650 units of product X needs to be produced for the concerned period, and 9250 of sales plus 2200 minus 2000 units of opening stocks, which is 9450 units of product Y needs to be produced. Okay, and two assumptions were made. Two assumptions were asked in the questions. Okay, assumption: if there is no if there is no loss, then production budget is as same as this value. Okay, if there is a loss of normal loss, there is a normal loss of 5 percentage in product X, and 10 percentage in product Y. Okay, then what could be the answer? Okay, so if the company is facing the loss, then the company has to meet this demand, for demand of 7650 units, and 7650 units of product X, and 9450 units of product Y. We apart from the normal loss in product X and product Y, we need to achieve this unit. So to do that, we'll uh, we have to find out the gross production budget. Okay, gross production minus loss, then this is product X and product Y. Okay, then this would be our net production budget units. So this is our demand for the period. No, so we should meet the demand. So the loss, we should forecast the loss, and based on the loss we have to produce our production, we have to produce our products as per the gross production levels. Okay, in units. Okay, we know the net production budget, which is 7650 units of product X and 9450 units of product Y. 9450 units of product Y. Okay, this is 100, this is 95 percentage, and this should be 5 percentage. This is 90 percentage, and this should be 10 percentage. Okay, so if 7650 is 95 percentage, then what could be 5 percentage? This would be 402.632. Okay, then what could be the 100 percentage value? What could be the 100 percentage value? 7650 divisible by 95 into 100, which is 8052 units need to be produced to get this 7650 units. Okay, and for product Y, 9450 divisible by 90 into 10, which is 1050, and into 100, which is 10,500 units need to be produced to get this units. So this is the production budget when it comes to loss and no loss. So very simple problem only. I hope you guys have understood this problem. So this is the max level problem we can expect from production budget. Let's get into the raw material purchase budget. Okay, when it comes to raw material purchase budget, we need to budget the quantity we need to purchase and the cost, at what cost we need to purchase. So record at what cost we need to purchase, both should be off for our production, and it should not cause any wastage and should not excess our stock levels. So that's what we are planning with the RM budget. And RM budget is revolves around the production budget. It's the same like RM consumption. What how much we need to consume for our production. Based on the production levels, we are going to purchase the raw materials, and what should be our desired closing stock we need to have in our godown, and what's our opening stock. This is the handled information we have in our hand. Okay. And estimated RM need to be purchased is what we are going to find with the RM budget problem. Okay. Now from the question we can understand that they are asking us to prepare the raw material purchase budget for January 2021. Okay. The estimated stock level given, which is opening stock given in the question. Okay. Closing stock also given, desired closing stock level the company has provided in the question, they have provided. And estimated consumption level also provided, how much they need to be they need to produce for the concerned production budget. Okay. And then purchase price also given, standard price also given. Okay. The standard price is the price, predetermined price set by the organization to control the raw material purchase cost, that has been given here. So we need to find out the estimated RM purchase, and that estimated RM purchase should be calculated with the standard price per unit. Okay. So that's what we are going to find out. Let's prepare the table now. Particulars: A, B, number of there are 6 raw materials given, D, E, F. Okay. These many raw materials have been given, and RM consumed estimated by the organization is 1,20,000 units, 44,000 units of B, 1,32 units of C, 36,000 units of D, 88,000 units of E, and 1,72,000 units of F, plus desired closing stock of RM. So how much raw materials the company wants to keep it in a godown at the end of the period. So that is 20,000 of A, and 8,000 of RMB, and 28,000 of RMC, and 4,000 of RMD, and 16,000 of RME, and 32,000 of RMF. Okay. Minus opening stock level, the company is estimated by the company is 16,000, 6,000 of B, 24,000 of C, 2,000 of D, 14,000 of E, 28,000 of F. Okay. If we adjust all these, we'll get the RM purchase, estimated RM purchase. Estimated RM purchase budget units. Okay. The 1,20,000 units plus 20,000 minus 16,000, which gives us 1,24,000. 44,000 plus 8,000 minus 6,000 gives us 46,000. 1,32,000 plus 38, 1,32,000 plus 28,000 minus 24,000 gives us 1,36,000. 36,000 plus 4,000 minus 2,000, 38,000. 88,000 plus 16,000 plus 14,000, 1 lakh. Wait. 88,000 plus 16,000 minus 14,000, which is 90,000. 1,72,000 plus 32,000 minus 28,000 gives us 1,76,000. Okay, what's the standard price predetermined by the organization is this is 0.25 per 0.25 paise per unit of for RMA and 0.05 paise of 0.05 rupee just per unit of RMB and 15 paise of RMC and then 10 paise of RMD and then 20 paise of RME and 30 paise of RMF. So if total it, we'll get the estimated total RM purchase budget value. Okay, let's multiply all these values now. 1,24,000 into 0.25 just 31,000. 46,000 into 0.05 which is 2,300. 1,36,000 into 0.5 which is 20,400. 38,000 into 0.1 which is 3,800. 90,000 into 0.2 which is 18,000 for product E budget fixed. 1,76,000 into 0.3 which is 52,800 for rupees for RMF. So in total grand total is grand total of estimated total RM purchase budget value is rupees 31,000 plus 2,300 plus 2,400 20,400 plus 3,800 plus 18,000 plus 23 just 1,28,300. So this is the grand total of estimated total RM purchase budget. So all this you can find the similarity of this for the production budget and RM budget. Production budget is production budget takes the actually production budget accounts for the annual demand of sale units. Okay, and then while RM budget supports the production budget. So these are all the line of actions happening in the organization. Okay, that's it. We'll see some more problems from this budget chapter tomorrow. Thanks.